of travel through the day. We've had the markets open yesterday, Monday, the first day of trading for August, and took a significant decline of 3%. And that trend is continuing this morning in Asia. Attempts to recover seem to be stagnating. Let's kick off with Robin Mills, CEO of Qamar Energy. Good morning, Robin. It looks like the China outlook is giving the markets at least a little bit of concern. We know where supply is going, given the OPEC agreement, but demand is looking a little uncertain. Your thoughts?
Yes, we've now got a clear look ahead, Sean, for production, certainly from the OPEC side. Now that we're behind, we've put the UAE-Saudi disagreement behind us. So now the focus is really back on the demand side. And we've known about the Delta variant for a while now, but that still seems to be coming into focus. I think because of the effect that it's able to have on countries that have contained the pandemic pretty well up till now, primarily in Asia, but now are coming to terms with the fact that the Delta variant is much more contagious and it's proving much harder to contain. And I think this really raises the question, these strategies that countries like China and Australia in their different ways have pursued of absolute elimination of COVID. Is that tenable now? Is it tenable given a much more contagious variant? And is it tenable given that at some point, they have to open up and they have to go back to normal and have travel and relatively open borders and so on? How do they do that, and how do they transition from the point of the complete, almost complete closure and attempt to eliminate all cases, combined with still relatively low levels of vaccination? So they're in a very different place, a much better place, you could say, than European and North American countries, but now in a way a more difficult position.
Let's bring in Leo Tameeris, CEO of NRG Global, sitting in Singapore with a front row seat to China. Leo, what does the outlook look from there? Is this China wobble a significant one? Is it just simply a return to the pre-COVID trend line? Your thoughts?
I think it's caused by two different factors. One, of course, is COVID. Even though the number of cases in China is relatively low, it's geographically widespread and it's all over the country. So that is a concern. And the main impact of it is that the authorities are clamping down immediately and massively, even if there are a few cases. They lock down, they keep people in the house, they stop travel, etc. In the areas, they do massive testing, like 1 million people a day in the cities, and they're further ramping up the vaccinations. So that is the main impact. It's not the number of cases, but the massive reaction to it, which is clamping down the economy. The second is the policy. It's a lot of yesterday was mentioned the PMI, which was unexpectedly low, still above 50, so still indicating growth, but much lower than expected. Export PMI actually is below 50, indicating contraction. So that will work out in the next month's producer PMI, I guess. But the economic policy of China, and that was President Xi mentioned that at the latest Politburo meeting, is to aim for longer-term economic stability, even at the expense of short-term growth. And that's what they're doing. They're clamping down on commodity price speculation, for stability, clamping down on housing speculation, preventing financial risks. So all the measures they put in place are dampening the growth. I mean, it's still growing, of course, but they're dampening the growth.
It's growing, but 6% could be a lot different than 8% in terms of oil demand and commodity demand.
Exactly, but I think it's partly a conscious decision, aiming for longer-term economic stability rather than the immediate growth.
Let's bring in Kate Dorian, MEES contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. Kate, good morning. Appreciate you joining us. I know it's early in London. In terms of the other big story that's over the weekend and still continuing is the standoff with Iran. The latest tanker attack seems to be ratcheting up, and now the Americans and the British are indicating some kind of response. The Iranians are reacting to that with their own defiance. Your thoughts of this event? How significant is it? Can it escalate into something serious?
I think it could escalate into something, but it's not the first time that we've seen attacks on shipping. I think this time, because you've got a British and Romanian who died in this attack. I think that makes it a bit more complicated because you've got, Britain. But yes, I mean, you've got change. You've got a new president in Iran. You've got a new government in Israel. So I think it's very difficult to say how it's going to go. And I suspect the Americans are going to be involved trying to sort of calm things down, because I think the last thing anybody wants is to have a conflagration at this time.
Robin, your thoughts on this story and from the point of view of its relevance for the viability of the revival or the continuation of the Iran nuclear talks in Vienna? You're on mute, Rob, sorry.
Yeah, look, it's a concern. I mean, I think the first thing to say, this attack is a more serious one, obviously, since over two deaths. As opposed to previous attacks, which were pretty well calibrated, I think, to cause mild damage, but nothing too serious. Not the first attack to cause fatalities, of course, because there have been attacks, at least one attack killing several, I believe 3 people off the coast of Lebanon. Who was an attack on an Iranian Lebanese vessel, probably delivering to Syria. Who carried out that attack? Well, there have been several attacks in that area and in the Red Sea on Iranian vessels as well. I think you can draw your own conclusions. So, both sides, I think, are blamed for pushing this and escalating this situation. So that's one side, and then obviously this kind of links to the nuclear negotiations, which I think fair to say are not going well, have really bogged down. I think now not expected. Well, we're not going to get any deal under the Rouhani government, which has very little time left. Will things get picked up more seriously when Raisi's team is in place? A less experienced team that's kind of picking things up cold in a less friendly geopolitical environment now. I think the signs of that have certainly darkened somewhat. And though we say nobody wants these things to escalate, I don't think the US or the UK or others want things to escalate. But of course, there are some forces who do want things to escalate. And you can blame, certain elements certainly on the Iranian side, who are clearly pushing things a bit, and that is a risk that things do escalate on either side. But I see it's a little, it's a related issue to the nuclear talks, but also a little bit separate. And I think the effort on the nuclear talks remains, but certainly the prospects of that are looking less promising than a month or two ago.
Leo, despite the challenges on the outlook for China demand, we continue to see robust outlook in the US, and inventories again will report today and tomorrow, the API and then the EIA, that would expect them to show a continued decline. Your thoughts on, does that give the impetus back to the oil market, which at the moment seems to be dropping down towards 70? Could that give us the impetus to correct upwards?
Well, I think on the supply, as you started out saying, supply is pretty well defined at the moment. Stock drawdown is of course should be bullish to the markets. On the other hand, I think the main issue is the demand side. We see India picking up, highest gasoline back to pre-pandemic levels, diesel not yet, which is 40% of the total consumption, and indicator of the production activity. But that also looks better. China, as we mentioned before, the demand is growing at lower rates than, and also the oil demand is growing at lower rates than what we even expected a month ago.
Would you expect China to continue to draw down on its own inventories rather than be importing at previous volumes?
I think so. As Miller said last Sunday, they're probably going to draw down even on the strategic reserves and the private reserves that are in place as well. That has as much to do with the current price levels as with the domestic demand itself.
Kate, we haven't had a chance to get your insights yet on the OPEC Plus deal that was eventually done last month and an agreement on output quotas. At the time, it looked like 400,000 barrels a day per month was lower than the demand. Maybe OPEC Plus got it right. Your thoughts on the deal?
Well, they seem to have got it right because the price is holding above 70. We've also seen, if you look at shipping data for July, you'll see that already you're seeing more volumes on the water. I think it's more than 700,000 barrels a day. What's interesting is that if you remember when the deal was struck, finally, Prince Abdulaziz, the Saudi minister, said not all of the members will be able to raise their production, so that you're seeing higher volumes coming from Saudi Arabia, from Iraq, Kuwait, but not so much from the UAE, which is really interesting, even though they've got their Murban crude and they are putting more volumes of Murban. They're sort of the new benchmark onto the market. So I think that's really balancing things out a little bit, that not everybody has been pushing. And I've been looking at numbers for Iraq, for example. They haven't really increase their production. They are more within their own quota. So I think there is a certain discipline. Russia hasn't actually increased, even though they have the option to do so. So I think, bearing in mind that you may get a bit of an oversupply in the first quarter of 2022, I think they probably did get it right, yes.
Robin, your thoughts on that, just following on that trend, is all well now in the house of OPEC? Is this agreement on output quotas for next year indicating that all feathers have been smoothed out? Or, as I was speaking last week with Anas Al-Haji, was this a politics to oil or oil to politics problem? Your thoughts on the outlook for the harmony of the OPEC Plus?
Okay, I think firstly this was an oil-driven issue. I think a lot of people tried to bring in a lot of other UAE, Saudi, UAE regional issues into it. Those issues exist for sure, but I don't think they were really directly linked to this. I think the UAE had a very genuine objection to the way the deal was set up, and was genuinely unhappy with it, and pushed its position and got a considerable improvement in its position. Now, I don't think this issue has gone away, because I think that the UAE's production capacity continues to increase. It's still got expansion plans. Its baseline is still significantly below its own assessment of production capacity. So I think we'll have to see, come April and the end of that phase of the deal, will the UAE perhaps choose at some point to push again and seek for a further increase? Obviously, I think that'll depend on what's happening with the market at that point and what's happening with the other countries, OPEC, the other OPEC Plus countries' production levels. Because, I think Kate raised an interesting point. Iraq isn't raising production very much. Iraq has been through a year and a half of heavy underinvestment, companies considering leaving, threatening to leave, activity well down. So, is Iraq's production capacity really as strong as it might have been assessed? And Iraq is the other country you would look to for potentially for strong production growth if constraints are released. But can Iraq actually do that right now? So I think that's an important one to watch, is the shifting balance of power within OPEC. And then obviously, the question, okay, we've got this, the steady increase each month, and that at some point is going to run into concerns. There's going to be months of weak demand when perhaps 400,000 looks like too much. Is OPEC going to be able to be consistent and stay the course, or is it perhaps going to come into some months when it assesses the market is a bit weak and has to think again about whether it's right to bring back the monthly 400,000 increment. I think you'll know from my previous comments that I'd advise OPEC should be pretty consistent, even in the face of some kind of temporary month-by-month weakness. But of course, there's always a difficulty of assessing market weakness. Is it just a one-off thing? Is it just a country locking down or something temporarily, or is it a more general slowdown? In which case, the whole basis of this increase would have to be reconsidered. For now, I think we're at the phase of perhaps a little temporary weakness, but still, that's something that's got to be watched closely, of course.
It strikes me that they probably would enjoy a few simple rollover meetings without having to revisit output quotas or sharing or cuttings. Leo, looking to other places in Asia, clearly China is getting reported on in terms of its COVID wobble at the moment. And as you pointed out, a lot of government intervention across the economy. What about the rest of Asia? Clearly Indonesia, Vietnam, Philippines, all countries with over 100 million population, big demand centers. What's their outlook at this point?
I think it's pretty bleak in all the countries around here. Indonesia just extended the lockdown again in Jakarta. Philippines put up a new lockdown in Manila. Malaysia is still 18,000 cases a day. Thailand, same thing. Even Japan, over 10,000 cases a day. They call a state of emergency in many of the areas. So it's Australia, Brisbane completely locked down, and what they call a nightmare scenario. So it looks pretty bleak in all countries. This Delta variant is really spreading. Even Singapore, even though the levels are relatively low, but it's a lot higher than what it used to be in the past few months. So it's I don't think there's any relief from that side. Also in the other Asian countries.
Is there any social tension emerging at all around we were having in Europe tensions emerge by people sort of increased enforcement to take the vaccines that are available. In Asia, we don't hear much noise from the people about the lack of availability of vaccines. Is it even a social issue or not?
Well, it is in places like Philippines and Indonesia. When I talk to friends over there, it's a lot of people want to get the vaccines, want to get vaccinated, but it's difficult to get. I mean, you talk about people that can't even afford to travel to the testing sites or vaccination sites, let alone pay for their own tests if they have to pay for their own tests. I mean, Jokowi, President of Indonesia, wanted to vaccinate 5 million people a day. But that was his goal, but they are nowhere near there. So there's a strong demand for vaccination in especially those two countries. Other countries, you see more. It translates into political tensions, like Malaysia, where the king and the prime minister are at loggerheads at the moment over a couple of things. Thailand probably the same thing. That. Even though that is kept more under wraps there, but there is tension in there is no uproar in that sense, but there's tension. People want to get vaccinated. The governments cannot roll it out fast enough, and political tensions in some countries.
Kate, meanwhile, Europe showed some pretty robust performance numbers in the last few days. The PMIs out of Germany in particular looking very, very strong. It seems Europe, like America, but is getting used to coexisting with COVID and economies performing pretty well.
Yes, but I think, you've got to also be aware of the fact that everything is uncertain at the moment. You can't take 1 month's worth of data and go with that. And I think that's, if you look at, and I don't think what happens in Europe really has much impact on oil demand anyway, because it stopped being that for a long time ago. I think it is as a barometer for sort of economic growth. Yes, maybe, because it is the largest trading bloc block, but there isn't that much trade. We still have issues with supply chains. We still have, travel restrictions. We still have the, potential for new, not total lockdowns, not as we had, but you look at the UK, for example, which is surprising. Everybody thought that we would have this wave, and it hasn't happened. So I think the rate of vaccination matters. You're also seeing a lot of hesitancy. You've got in France, you've got people protesting against this sort of mandate for everybody to be vaccinated in the public sector. So I think it's very uncertain at the moment. So, and it has been, the market has been very much focused on demand more than supply, because that's where the uncertainty is. OPEC, and I suppose that's what the whole intention is of Saudi Arabia, to sort of extend this supply management agreement to the end of next year, is to give, at least on the supply side, some, some indication of where we're heading. And
That's good.
Yeah.
Let's get the survey question. Give the rest of the room a chance to jump in on some of these issues. Is the escalation of geopolitical tensions between Iran and Israel/US bullish or bearish for oil prices? I've been juggling on this one for the last 24 hours and I can't quite figure it out. Geopolitical tensions typically in the normal course of events would be bullish for oil prices, the threat of war in the major oil supply lanes of the Gulf, but nonetheless it doesn't seem to be bothering the market at the moment. There should be a third option, screams Rustin Edwards from the back seats. That's true, there should be, but there isn't. So bullish or bearish, do you think these? And what would the third option be, Rustin? Post it there on the message group. Robin, the other big story, neutral. That's not an answer, Rustin. That's staying on the sidelines. Robin, the other story that's out over the last few weeks, but sort of finally culminating yesterday in terms of the oil majors' Q2 results, Bionic, BP reporting yesterday, back to dividends, back to share buybacks. What do you think is the consequence of the oil majors having such a performance, at least on revenue terms? Clearly, it's simply oil prices are much higher than they were, so they make lots more money. But ultimately, does that change the trajectory of capex expenditure, more capacity? Your thoughts on the coming out of a robust earnings seasons for the oil majors?
Yeah, extremely strong results. Not surprising, oil prices are strong, of course, and capex has been cut very heavily. Costs have been cut in general, so very, very good results. Look, I think it's interesting. You'd said in previous cycles that this capital discipline thing will last for a year or two, but then the companies will go to spending heavily if prices remain strong. Capital discipline never lasts. This time is perhaps a bit different because of the push, particularly on the Europeans, for their low carbon targets and their transformation and so on. So how much of that cash will go into shareholder returns, whether it's buybacks or dividends, and how much will go into capital spending, and how is that divided between the oil and gas side and the new energy side? I think you would see that. The Europeans have a pretty strong push to strengthen their kind of green energy side. The Americans, I wonder about it, and I think again, if you continue to see pretty strong oil and gas prices, then the US companies, Chevron and Exxon in particular, will at some point be looking at increasing their expenditure on the oil and gas, and particularly on the upstream side. And certainly the smaller US companies will, and when I say smaller, I mean some very large companies, but the large US shale independents, we're seeing a lot more active M&A, some stronger companies coming out. Yes, they all talk a good game on shareholder returns, but I think, again, if prices remain this strong, that there'll definitely be a temptation to ramp up activity.
Leo, we've seen in Asia and China in particular sort of low throughput levels on Asian refineries, Chinese refineries. Can we expect those to ramp up? Those typically have been stuck in the low 80 percentiles. What's your outlook for Asian refiners going forward?
Well, the Chinese, in China, you will have a two-pronged issue. That the private refineries are not curtailed, but they are stimulated to or destimulated to produce more. The import quotas have been cut for the second half this year. The trading of quotas between the state-owned refineries to the private refineries has been stopped. So the private refineries will see a slowdown. On the other hand, the state-owned refineries will probably see a pickup in the running rates, plus new capacity that's coming on stream. So I think overall, China will imports will still continue to grow, but at a slightly lower pace. Other countries in Asia, Japan is of course problematic. They are putting refineries back online, but which slows down imports of products into Japan. But the demand in Japan will continue to wobble in the short term.
What was the reaction to the Saudi? I just wanted to get your opinion on the Saudi OSPs, which were, given the current outlook, feel a little bit on the upper end. Were Asian refiners receptive to that? How did that land?
Well, you see, Asian refineries, the gas oil refining margins are back at 2 months highs, above $8. Other product refining margins are looking much better as well. So outside of China and Japan, other Asian refineries see better refining margins at the moment.
Kate, I wanted to get your insights on a sort of slightly tangent from our focus subject, but ultimately Lebanon. I read your piece in MEES recently, very insightful, very sad on some levels, obviously, on many levels, every level perhaps, but perhaps just a quick update on the outlook for Lebanon. Is it as bad as it does appear?
It seems to be getting worse. I mean, on top of the economic problems, on top of the whole situation, this sort of political vacuum, there's also the brain drain. You know, so many people are leaving, trying to leave. And, you know, you've got more than 50% of the population below the poverty line. This is a country that used to be the Paris of the Middle East, that used to have a thriving banking business. I mean, it's going to be very difficult to see how it can actually return to what it used to be, plus the refugee problem. They've got more than 1 million refugees, apparently trying now to go the other way. It's interesting to see that, you know, the countries that are trying to help are Iraq, which is supplying it with fuel, maybe the wrong kind of fuel. You're not seeing that much interference from Saudi Arabia, which used to be the sort of power broker. You've got Hezbollah saying, oh, we can get it from Iran. I think Iran is too busy with its own political transition to give it much heed. So I think, yes, it is serious, but, you know, it has been a basket case for a long time.
Well, it seems to be a basket now without any bottom in it. Let's get the survey result and give Robin the last word today. 76% bullish, 24% bearish. And I take your point from the chat room that neutral might have been handy to include in there, but nonetheless, it seems an overwhelming bullish sentiment. Robin, your outlook for the rest of the week, oil prices softer Monday, Tuesday. Does this Iran issue become a factor for the oil markets?
Yeah, look, I agree with the survey. Look, objectively, you've got to say it must be bullish. Practically, is it having much effect right now? No. Do people think that there's going to be an outbreak of war and all supplies are going to be from the Gulf are going to be interrupted in some way? No, nobody really seems to be thinking that. I mean, never say never, but it doesn't seem to be likely at the moment. So the real impact is what does it have on the nuclear talks? And it's a negative for those, I think pretty clearly, even though those two things are not that, as I said, not that closely linked, but clearly it doesn't help the nuclear talks. And that means, you know, 1.5 million barrels a day of Iranian supply stays off the market, and perhaps even more because the Biden administration, I think, has talked about putting more pressure on China to cut Chinese purchases. So, you know, if the Iranians really continue in this position and there isn't a deal with the US on reviving the JCPOA, then you could see sanctions that are even tougher than the Trump era sanctions. And in this case, the US might actually, if it can paint Iran as being the difficult one this time, they may get more multilateral buy-in. It may be easier to actually enforce sanctions. So so in that case, that's clearly got to be bullish. I mean, given all the supply that OPEC can bring back, it's not necessarily that bullish in the short term, but longer term could be. And I think that, and you asked about so that is an issue. It's not the primary factor of the market at the moment, but it's obviously one to watch. But the primary factor is clearly on the Asian economic situation and what's happening there with COVID and the COVID variants. I don't think we'll see mass lockdowns on the style of 2020, but clearly it's hampering recovery. And we're down at the Delta variant right now. That's proven problematic. What about Epsilon through to Zeta? Are we going to see a variant that is perhaps even more transmissible or even more deadly? Let's hope not. Let's hope vaccines continue to be effective and get more effective. But that's got to be a wild card, which is worrying.
And it's only August, and with the winter to come, one would have to think this is a challenge that doesn't go away. We'll have to wrap it up there, I'm afraid. Thank you so much, Leo in Singapore, Kate in London, and Robin in Dubai. This Tuesday morning, markets opening in Asia a little bit down, continuing yesterday's trend where we saw a big drop of 3% on concern for the outlook from demand, particularly from China, the world's largest oil importer. Thank you very much, everybody. We'll catch up with you in the coming days, 10:30 each morning UAE time. All the best.